This is Bruce Blythe with Advance Publishing outside the Chicago Board of Trade, where the big news of the week was the Halloween bankruptcy filing by MF Global, a major trading firm that did a lot of business here as well as in other markets around the world, thrown a lot of uncertainty and confusion into the markets. Generally, MF was a large presence in grain and livestock futures, both from a trade execution and clearing standpoint. CME barred MF brokers from the trading floor earlier this week, and many trader customers of MF have been unable to get their money because accounts have been frozen as part of the bankruptcy process. So it's a very serious situation, and traders say it's led to a decline in ag volume this week. Independent cattle trader Phil Stanley said it generally has cast a pall over the markets here, and nobody's really sure how this is going to play out. Now in the grains, corn markets eased a bit this week. December futures trading around $6.53 1/2 a bushel, down 1.5 cents from the end of last week, on pace for its worst weekly decline in 5 weeks. Relatively light amount of news this week. Markets are waiting for the USDA's next crop production update, November 9th. We continue to see some private analyst estimates that were a bit lower than USDA's forecast. Allendale, which is an advisory firm, projects the U.S. harvest at 12.41 billion bushels. That's down 20 million bushels from the USDA's October forecast. Allendale also projects a 147.8 bushel an acre average U.S. yield, down slightly from USDA. In livestock, we saw continued strength in cattle. December futures up almost 5% on the week, currently at $1.24.5 a pound, and that's a record high close for a nearby contract. This reflects strength in cash. Cash cattle up $2.50 per hundredweight a week as meat packers continue to go after slaughter-ready animals. Phil Stanley, the cattle trader, says the primary bullish driver here is the strong export market. He thinks December futures may test the contract high above $1.26 a pound, which was set back in April. Lean hog futures, kind of the opposite tale. That market continued to erode. December futures around 86.6 cents a pound, lowest settlement since the end of September. This is being driven by wholesale pork prices, traders say. We've had wholesale loins drop to the lowest levels since May, and ham and belly prices declining as well. The benchmark pork cutout price currently a little above 94 cents a pound, which is still 23% higher than a year ago. Trader Jim Burns, who's in the hog pit here, noted that China has shown a pattern of jumping into the U.S. market on price weakness in hogs, snapping up more U.S. pork. They've been a huge buyer of pork this year, so the potential that China may be buying more could provide a floor to hog prices here. So once again, I'm Bruce Blythe with Advance Publishing outside the Chicago Board of Trade.